Hello, thank you for joining us to hear about the PPP loans and retention credit. Just would like to cover some various items that are pretty exciting that were in the new legislation that was passed at the end of December. My name is Karen Kerber. I'm a shareholder with KerberRose. We have offices in 11 locations throughout Northeast Wisconsin, one of them being in Shawano, Wisconsin. You can certainly see my email as well as my phone number. If you have any questions about the information that I go over, feel free to reach out to me. I'm more than happy to answer questions and help you through the process as well. So for me, the most exciting news of the new legislation that was passed at the end of 2020 was that both the PPP loan and the retention credit can be used by employers. Just one catch, can't be for the same payroll costs, but I think as we go through the presentation today, you'll get an understanding of just what an advantage this can be if you go through and really think about how you're going to utilize your payroll costs for one program or for the other program. So what was in that bill that was passed recently? Well, another really great news that came out of that was that the PPP expenses that we paid with our PPP loans are 100% deductible. That does apply retroactively to all PPP loans, so those that you received during 2020, as well as ones that you may receive during 2021 if you're eligible for the round 2 of the PPP funds. This is crucial for many folks. They could have ended up with an unexpected tax burden, and quite frankly, they utilized all of their funds and resources to deal with the downturns in business and the pandemic overall. So this was such a relief to hear for our clients. The Wisconsin, I should have changed this slide to be will not be deductible. The Wisconsin Department of Revenue did release some guidance, I think it was last week or so, that indicated that no, they are not going to follow the federal guidance. So it will be taxable to yourselves, can certainly result in some Wisconsin tax being due. So just prepare yourself for that, or talk with your accountant and see what the implications may be for you. Another item that was really good news is the EIDL advance reduction, where they were subtracting it out of your PPP forgiveness. That has also been repealed. So if you had received up to that $10,000 EIDL advance, EIDL advance, that's no longer going to be subtracted from your forgiveness. You may be saying, but wait, I already did my forgiveness and they already subtracted that $10,000 out of there. The SBA is supposed to go through a mechanism and refund those dollars to you. I'm not entirely certain how that's going to work, but believe the SBA will be coming out with some additional guidance on that. The other element of that is good news is those EIDL funds are not taxable. So again, no unexpected federal income tax liability. Unfortunately for Wisconsin, that's not going to be true, and they will be taxing those funds as well. They've expanded the Paycheck Protection Program, and this is retroactive to the 2020 PPP funds, as well as any of the round 2 of those funds that you may obtain. And this is where it's really great news, and it allows you some flexibility on how you use your PPP funding and potentially the ability to utilize less dollars for payroll. And we're going to get to why that's really important. But the additional 4 categories of expenses that you can utilize your funds for is covered operation expenditures. Now, these are expenditures related to if you had a purchase order in place prior to the receipt of your PPP funds. And it can include things that you see listed there, such as delivery charges, processing, accounting fees, and so on. Excuse me one second. Excuse me. They're also allowing you to use the funds for covered property damage. That's damage that may have happened due to any public disturbances that weren't covered by insurance. The next one gets me really excited for our restaurant or food related industries, and it covers orders for goods and services in effect prior to taking out the loan, but also for perishable goods during that entire 24-week period, if you use 24 weeks, or 8-week period of items that you were purchasing that were perishable. So think about it in the food industry. You have fruits, vegetables, some meats, a whole variety of things that have a certain shelf life. And obviously they're subject to then getting thrown out and wasted. Those are your perishable goods. Step back and look at how many dollars you may have utilized for those supplier costs during your PPP loan period. And it also now will cover worker protection equipment. So things like drive-through windows, changing out your ventilation, excuse me, or filtration system. If you needed to put in physical barriers, like you see a lot of plexiglass and so on, those kind of expenses are now covered as well. They are continuing with the flexibility in selecting that covered period, so you can choose between 8 weeks and then not more than 24 weeks for costs that you would utilize for your PPP funding. The payroll percentage remains the same at 60%. And then the non-payroll category is still 40%. But think about those expenses on the previous slide. Add those to your rent, your utilities, your mortgage interest, your loan interest, those that were eligible for the non-payroll expenses under the original PPP program. Try and get up to 40% of your costs on your PPP forgiveness application being used for these non-payroll categories. That will allow you to free up your wages, which may allow you to use that retention credit, which, as we continue to talk about this, I hope you see really the value of considering the retention credit as well. Important to note that payroll costs are not just the wages you're paying to people. And remember, those wages also include things like tips. Sometimes people only think about the salary or wages that the employer paid directly, but things such as tips are part of payroll costs. And also, as importantly, so is group insurance payments. So health insurance, life, disability, vision, dental, all of those kinds of insurances also would be added to or included in your payroll costs. There was also a misunderstanding of whether this included only the employer portion, or did it also include part of the employee portion? Well, it does include an employee portion as long as those dollars were from pre-tax contributions to the premiums. So it's the employer portion plus pre-tax employee contributions towards those premiums. There is now a simplified loan forgiveness process for loans that were under $150,000. The SBA has established a one-page application. You need to list out things like number of employees retained and estimate the amount of loans spent on your payroll costs. But there's no documentation required when you submit that application. You need to make sure you're retaining it. Remember, for employment records, retain those items for 4 years. Other kinds of records, retain those for 3 years. They're indicating that the expanded covered costs don't apply to loans if you had already received forgiveness before December 27th of 2020. I believe they will make a change to this. Could be wrong, but I believe they will make a change to this, because otherwise it's overly punitive to those folks who went through and applied for their application forgiveness, but they didn't know all of the different caveats that were going to be added later. So I do believe that they'll make some changes and this will become eligible to everyone. So please make sure you stay tuned. So the new Paycheck Protection Program is extended through March 31st of 2021. You can go back and apply for initial loan. So if you missed out on that first wave of funding back in 2020, you can still apply for an initial loan. You also may be eligible for a second draw loan. The protection program was also expanded now to include 501c6 organizations. So examples, chambers of commerce or various leagues that are membership leagues. It also has some additional funding or eligibility available for destination marketing organizations. It does expand it to now be 300 or fewer employees for the new loans. And then there's some caveats there if you're involved in lobbying that may exclude you from being able to participate in the Paycheck Protection Program. So who's eligible? Well, if you weren't in on that first round of funding, you would be considered a first draw borrower. So you are eligible if your business has 500 or fewer employees. Remember, this includes sole proprietors, independent contractors, self-employed, all of those folks. If you are in basically a hospitality restaurant kind of industry, your NAICS code is going to start with a 72. Then it's 500 employees per location. So say that you have a restaurant, but you have 3 locations. It would be 500 employees per location as opposed to 500 employees in total. 501c3s are eligible. That includes churches, many even with the schools, that the choice program came out and allowed some favorableness for organizations who were applying for the PPP loans as well. Veteran organizations, tribal concerns, and then as I just mentioned, it's now able to be used by 501c6 and destination marketing organizations. Those, it does have to be 300 or fewer employees. Going to include, as I mentioned, entities such as Chamber of Commerce's, and there is a limit. The limit of the amount of the loan that you can receive is up to $10 million, so pretty significant dollars there. For the second draw loan, they're really trying to target and help the businesses that were hardest hit throughout this pandemic. So they're going to target and limit the PPP second draw loans to employers that have 300 or fewer employees. There does have to be a reduction in gross receipts in any quarter by 25%. And for that, you'll compare quarter to quarter or year to year. And I can explain that a little bit more in the next slide, I think. And then you also have to indicate that you either have used or will use that first draw loan by the date that you apply for your second draw PPP. So I mentioned that decline in gross receipts. It does need to decline by 25% or more, and you can compare either one quarter of 2020 to 2019, so first quarter to first quarter, second quarter to second quarter, and as long as you have a 25% decrease in gross receipts in one of those quarters, you are eligible for the second draw loan. You can also look at it on an annual basis. So you could take your entire 2019 gross receipts and compare those to your 2020 gross receipts and be eligible from that perspective as well. When you do apply, you may need to submit some documentation that's going to substantiate that revenue reduction. So if your loan is going to be more than $150,000, you're going to be required to submit that documentation showing that your revenue declined by 25% or more. That can be your annual tax forms, so like sales tax returns, for example. If you have your corporate return done or Schedule C done, you could also utilize that to show. Any loan under $150,000, you're not going to be required to show that documentation when you apply for the loans or for the forgiveness. I'm sorry, you won't be required to show that documentation when you apply for the loan. You will be required to show that at the time you apply for forgiveness of your loan. And also be reminded the SBA can request that documentation at any point in time. The maximum amount for the second draw loans is $2 million. Going to be calculated the same way as the first draw loan, basically 2.5 times your average monthly payroll. There is really good news for restaurants, hotels, the hospitality kind of industries. Those are the codes that start with a 72. For those folks, they are eligible for 3.5 times their average monthly payroll costs. If you happen to be a seasonal employer, you can pick a different 12-week period on which to base your monthly payroll costs. And for this loan, you can decide whether it's most advantageous to use your payroll costs from 2019, 2020, or the 12 months prior to the application. You're going to want to pick the period of time where your wages are the highest or your payroll costs are the highest, so you maximize the amount of your loan. For many folks, that's going to be 2019. You may have had a decrease in employees because your business is down. So keep in mind, in all likelihood, you're going to want to look to 2019 to determine those payroll costs. The documentation for the second draw loans are going to be the same as what they were for the first draw loans. So substantiating what that payroll is. Good news is if you use the same lender and you also use your 2019 payroll figures for your new application for the PPP2 loan, then you don't need to submit anything because your lender already has that information. So just makes the process a little bit quicker, smoother, and easier for you. There is a new form that the SBA is asking everyone to fill out as well. It includes some additional certifications. The first one being that you have not or will not receive another second draw PPP funding, that you did have your reduction in receipts in excess of 25%, that you have or have used or will use your first draw PPP loan if you had received one. And truly that's the only way you can get a second one is if you received the first one. That you're not an ineligible entity. And they are going to ask you a question about a necessity test. But keep in mind, particularly with the COVID-19 strains changing, and we're just never quite sure if the government is going to decide to put some additional restrictions on us, potentially close us. So for most folks, there's enough uncertainty out there that if you are eligible for the PPP2 loan, I highly encourage you to apply. Just do keep in mind that any of the borrower's information is open to the public, so someone can go out to a website and look up if you received funds and if so, how much. But that really should not deter you from applying if you are eligible. There's also some elements for what we'll call DoOver provisions for the original PPP loans. Some folks received less than what their maximum could have been, or maybe they decided to return the funds. There was a little bit of maybe scare tactics initially where folks were questioning whether or not they should have taken the funds. So if you think that you might be eligible for this, it's certainly important that you explore this. I suggest you talk with your lender on this particular point. So, for example, there was also just uncertainty and not a lot of guidance for partnerships when they were applying. So some folks may have applied for the incorrect amount. So this is an opportunity for you to go back and get the full amount of a PPP1 loan, I'll call it, that you were entitled to. So who's ineligible? Well, entities that are permanently closed, businesses that weren't in operation on February 15th of 2020, publicly traded, lobbying, and then household employers, and then some affiliates of the People's Republic of China. So those are the folks who are not eligible for the Paycheck Protection Program. That brings us to the Employee Retention Credit. In my mind, the Employee Retention Credit was kind of put on the back shelf because everyone was applying for the PPP loans. And we were told, hey, if you get a PPP loan, you can't use the Employee Retention Credit. Well, fast forward to the end of December, and lo and behold, now business owners have the opportunity to claim the Employee Retention Credit and also obtain the PPP Forgiveness. As I mentioned earlier, the only catch is you can't use the same wages for both provisions. That just means we end up with a little bit of a puzzle or some decisions to make on which payroll costs we're going to use to obtain our PPP Forgiveness versus the ones that then we can use for the Employee Retention Credit. This is really great news, and it can provide so much more additional funding to yourselves and to struggling businesses. So it's really important that you explore this option. So what were the rules for the Employee Retention Credit for 2020? Well, basically, they could receive a refundable payroll tax credit up to 50% of the payroll costs that were paid to employees between March 12th and December 31st of 2020 if they met one of two requirements. The first one was if the operation of their business was either fully or partially suspended due to orders from a government authority that limited the commerce, travel, or group meetings due to COVID-19, or if your gross receipts were less than 50% of the gross receipts for the same quarter in the prior year. So basically you're comparing first, second, third, fourth quarter of 2020 to those same gross receipts for the same quarter from 2019. And they needed to drop by 50% or more in order to become eligible for the Employee Retention Credit. And then you remained eligible until your gross receipts got back up to being 80% or more. I'll show you an example of this and how it worked, because sometimes that seems a little bit confusing, but it's really quite simple. For the Employee Retention Credit for 2020, the wages are limited to $10,000 per employee on an annual basis. That means the maximum credit is $5,000 per employee for 2020. If you had more than 100 employees, then you can only take the credit on wages that you were paying to folks for them to stay home. So they couldn't be there working in your business. If you had 100 employees or less, then it includes all of the payroll costs for employees, whether they were still working for you or whether you were paying them to stay home. Big advantage for those folks with 100 employees or less. Another caveat is the person can't be related to you. So for example, you're the sole proprietor and you have your spouse or child working for you. That person is not eligible because they are related to someone who owns more than 50% of the business. The owner themselves are eligible. So say, for example, in a S corporation situation, you own 100% of the stock, your spouse and child work for you, or your parent. Those folks aren't eligible for the Employee Retention Credit, but you are. There's no exclusion for you as the owner, just for the folks who are related to you. It's kind of a weird little nuance there that they allowed, but that is how it works. So determining if you're eligible for that retention credit, well, let's just take a look at an example. So let's look at quarter 1, 2019 compared to 2020. The gross receipts for each quarter were $300,000. Obviously, we didn't have a reduction in our gross receipts of 50% or more, so we are not eligible for the retention credit for the first quarter. Let's move on to the second quarter, which is April through June. Our gross receipts are $300,000 versus $100,000, so 33%. So that's less than 50%, so we're certainly eligible. You may also be eligible for that quarter because many businesses were closed because of a government mandate during that period of time. If that is true, you are also eligible, but you're going to want to make sure you're looking at that percentage, because once you fall below 50%, you remain eligible for the employee retention credit until your gross receipts get to be 80% or more. So in this example, you continue to be eligible for the third quarter, because now, based on this slide, you see that it rose to 54%. That automatically makes you eligible for the fourth quarter. And even though you can see the gross receipts there are 83%, it doesn't matter because you remain eligible for that next quarter until that next quarter would show 83% or more. So in this case, you end up eligible for second, third, and fourth quarter. You would not be eligible for the new credit. Looking at, if you were going to use the fourth quarter, you wouldn't be eligible for the first quarter of 2021. That's how it works. If we do a little bit of twist on this, and say our gross receipts for the second quarter of 2020 were $200,000, it would be 67%. But if we were closed, we would still be eligible for the second quarter, but our sales hadn't fallen below 50%, so we would not be eligible for the third and fourth quarter. Hope that makes sense. Certainly, if you have some questions, feel free to reach out. So how much money do I get for this? Well, for the employee retention credit for the 2020 wages, there's just 3 employees there. The really important part is to focus on how much wages were paid or the costs incurred by quarter for each one of the employees. So you can see for quarter 2, employee A, we paid them $10,000. Remember, that's the maximum that we can get to utilize for our credit for the employee for the entire year. The next employee, it's spread out over 2 quarters. The third employee, it's spread out over all 3 quarters. In total, we've paid out $29,000 worth of wages / payroll costs. And at 50%, that's an additional $14,500 worth of credit that we may be eligible for. Again, need to coordinate this with how you apply for your PPP forgiveness, but significant dollars that your business may be eligible for. So what is it that you kind of keep saying you have to do this in conjunction with the PPP? We highly recommend that as you apply for your PPP forgiveness, and or even to go back and document this, because if they do truly come through and change the law, like I believe they will, to make everyone eligible for this, make sure, if you can, you are showing that you used 40% of your original PPP loan for non-payroll costs. Remember, this includes rent, utilities, mortgage interest, and loan interest on certain loans, but now it includes those operational costs, the cost for the protection equipment, and very importantly, if you're in that restaurant food service industry, that perishable good. You must use 60% of your PPP loans for payroll costs, so make sure you are meeting that. But what does this mean? Well, this really means you can lay out your payrolls for each of the period of time, and you can decide which payroll are you going to use for which. It's your choice. There's nothing that says you have to use the entire payroll for a payroll period versus carving some of those folks out and saying, nope, I'm going to use those for the retention credit. So for example, if you have people who are working for you that would be considered related persons, that parent, child, spouse, decide to use those wages and pay those using your PPP funds. You can't get a retention credit on them anyway, so make sure you use those on that schedule that you're going to put together for your PPP forgiveness. The same thing is true with wages over $10,000. We can only use up to $10,000 of wages per employee, so look at it. The wages over $10,000, let's utilize those for our PPP forgiveness. That depending on the timing of this, you really can kind of take this puzzle, put it together, and find the most advantageous way for you to be able to leverage using the employee retention credit while still having your PPP loan forgiven. That's exciting to me. That is a lot of significant dollars for some folks. As an example, I do have a client that's in the restaurant industry. Their original PPP loan was somewhere in the area of $60,000, small restaurant operations. We went through and we did the employee retention credit, did that puzzle, moved things around, and he's getting about $40,000 worth of employee retention credit. That's huge. He just went from having $60,000 of tax-free money on a federal basis to $100,000. He certainly was significantly hurt during this period of time, as many folks have been. So please make sure you kind of look at that puzzle and see how well it can fit together. So what are your steps really for 2020? First and foremost, determine if you're eligible for the employee retention credit. Remember, you're eligible if you were either partially or fully shut down, or if your gross receipts were reduced by 50%. That's for 2020 and determining if you're eligible. Then, once you determine you're eligible, now it's time to start looking at those qualified wages. It's limited to $10,000 per employee for the entire year. Need to review your PPP wages if you already asked for forgiveness. Make sure that you understand the ones that you're using for your PPP forgiveness. Do an allocation. Take those wages and say, where is it going to be most advantageous for me to use those dollars? On my PPP forgiveness application or for my employee retention credit? If you were fortunate enough to hear this before the fourth quarter for 2020 941 was due, you could claim all of those credits on that fourth quarter 941. If you are just hearing about this and you say, gee, I filed my fourth quarter 941 already, it's okay. It just means that you have to go back and amend each quarter. So you would have to amend the second, third, fourth quarter of 2020 if you were eligible for the employee retention credit in each of those quarters. So for 2021, the threshold has been changed from 100 employees to 500 employees. And remember, that's the threshold for determining whether or not you can include wages paid to folks who are working as well as not working. That's huge. That opens up the employee retention credit for 2021 to even a lot more employers. The other really cool thing is you don't have to have your gross receipts fall off by 50%. They've now changed that to 20%. Again, that's huge. Another big benefit is they changed that credit. Instead of being 50% per employee up to $10,000, it's now 70% per employee per quarter up to $10,000. So before, $10,000 for the year. Now looking at it on a quarter, if you pay someone annually, you pay them evenly, that's basically going to be a $40,000 employee, 2 quarters, because it's only eligible through June 30th, so up to $20,000, and you get 70% of that. $5,000 based on 2020, $14,000 based on 2021. This really reiterates the same thing, basically showing you what those changes are, kind of striking out the old and the new. For 2021, you still are looking at either being fully or partially shut down. And now you're going to compare still your gross receipts for 2021 to the same quarter in 2019. So you'll compare first quarter 2021 to first quarter 2019. The assumption is that sales were stronger in 2019 than they were in 2020. Hence, that's why they're letting you go back and look to that particular quarter. Gives you a more chance of making sure that your gross receipts had dropped by that 20%. You can also utilize fourth quarter of 2020 compared to fourth quarter of 2019 for determining your eligibility for the first quarter of 2021. So fourth quarter of 2020 to 2019 to determine if you're eligible starting January 1st through March 31st of 2021. Here's an example. An employer pays 10 employees making $40,000 each, 10 grand per quarter. The gross receipts were down by 20%. So that means you could get a credit calculation of $10,000 per employee times 70%, $7,000 credit per employee per quarter. Think about that. So quarter one, $7,000 credit per employee per quarter times 10 employees is $70,000. Your receipts are still down by 20% in the second quarter. That's another $70,000 that you're able to get. In this example, $140,000 of employee retention credit. Again, imperative that you review this in conjunction with a PPP2 loan if you are eligible to apply for one and you receive one. Here's the example of the receipts being down. So this case, they're comparing gross receipts of 2019 to 2021, 75%. Yep, I haven't hit 80%, so I'm eligible. Same thing for the second quarter. And as I mentioned, they could also use the fourth quarter 2020 compared to fourth quarter 2019 to determine that eligibility for first quarter of 2021. Use whichever one is most advantageous. If for some reason you didn't qualify in fourth quarter of 2020, make sure you recalculate it in 2021. Maybe you're eligible. Then use that as your measurement. There's no hard and fast rule on which one you have to use for that first quarter. Again, an example of the potential credit. You can see there the wages per quarter in this case for each employee. So $15,000 worth of wages. My maximum is $10,000 per quarter. In this case, each quarter, I'm eligible for $20,000 worth of wages. So that is $14,000 per quarter based on the 70%, $28,000 if I'm eligible for this in both the first and second quarter of 2021. Again, that's huge and significant dollars that you may be eligible for. So what are the key takeaways? Please determine today if you're eligible for the employee retention credit for 2020. Pull out your sales tax returns, pull up your QuickBooks, do something and just compare 2020 receipts, gross receipts by quarter. So January through March, April through June, July through September, October through December of 2020 compared to that same exact quarter for 2019. If you are down by 50% or more in any of those quarters, you are eligible for the employee retention credit. Once you are eligible, you continue to be eligible until your receipts hit 80%. Also keep in mind that if you were mandatorily closed, like say in the second quarter of 2020, you're automatically eligible, but you're still going to want to calculate those gross receipts because that might get you automatic eligibility for the third and fourth quarter. Make sure you do a worksheet. Make sure you really look at your wages. Decide which wages you want to use for PPP forgiveness and which wages you want to use for the employee retention credit. Like I said, it's kind of a game. It's kind of a puzzle. And it's really kind of fun. Us accountants are a little bit weird, but we love to just move around those numbers and try and get the biggest advantage that we can for our clients. The same thing is going to be true as we're looking at 2021. We're going to want to make sure that if you're eligible for that PPP2 loan and you apply for that, that we coordinate that with the employee retention credit. It will be critical, again, to make sure that you can achieve the maximum funding allowed. Like I said, small scale, that original PPP loan was $60,000. He was eligible for an additional $40,000 of employee retention credit. He has already applied for and received his second round of PPP funds. That ends up being roughly $80,000 because of the industry that he's in this year. We're going to make sure we're looking at those wages and, again, maximize the amount that he can get from the employee retention credit. It really is just exciting to be able to help folks, or for you to be able to look at this for yourself and get the most help you can, because it certainly has been tough times and people need some assistance. So highly encourage you to make sure that you are looking at that. So that's our key takeaways for today. Certainly appreciate you listening to this presentation. If you have any questions at all, feel free to reach out to me at my email or at my phone number that I supplied earlier. Just for reminders, that's 715-526-9400. We also do have a COVID-19, even though it's misspelt there. Please use COVID-19 at KerberRose.com, and we will assist you with your questions and get you the best information that we know and that we have available. Again, thank you so much for taking some time out of your day with me today. Really appreciate it.